Hey, everybody. Thank you all for coming. My name is Kayla Phillips. I am a VC at Hivemind Capital, and I am quite excited to moderate the first panel of the day on stablecoins with my esteemed panelists. So I will let them get seated and have each of them introduce themselves and give a little bit of color on how stablecoins fit into their roles.
Want me to start?
Test. 1, 2.
Hello? Can you guys hear me? There we go. Okay. Hey, I'm David Micley. I work on the business development team at Wintermute. Wintermute is a digital asset liquidity provider headquartered in London with an office in Singapore. And we just announced today the official opening of our New York office, set to open June 1st. So very exciting. Thank you very much. Wintermute, thank you. We're engaged in liquidity provisioning, trading across CeFi and DeFi, prop trading with our own capital to the tune of $10 to $15 billion a day. We have a few external business lines, OTC trading, spot and derivatives with all types of counterparties, liquidity provisioning for projects, and we also have a venture arm.
I don't know if I could beat that.
Hello.
Yeah, thanks. Good morning. My name is Louisa. I'm the head of stablecoins and payments at Mysten Labs. Mysten Labs is the original contributor to SWI network layer 1. Mysten Labs also built other protocols and projects with the likes of Walrus, a decentralized storage network, Deepbook, a central limit order book that is the liquidity layer for SWI. And I'm really excited to talk about one of my favorite topics, stablecoins. A lot of recent news headlines around this, particularly in DC, even though we are here in Canada, and extremely excited to speak to my fellow panelists about this topic.
Hi, everyone. My name is Mickey Graham. I'm the co-founder and general partner of an early stage venture fund called Metalayer. We are a 25 million pre-seed seed fund. Prior to starting Metalayer, I spent 4 years at Chainlink, where I was our head of growth. And then prior to that, I did a stint at 2 Sigma. So one of the core theses of our fund, which we'll talk more today about, is stablecoin investing, and made a number of investments in the ecosystem. I'm so happy to talk about this.
My name is Regan Bozman. I help run an early stage venture fund called Lattice, and we've invested in a handful of stablecoin applications, from import-export financing to foreign aid transfers. Generally really excited about the topic.
Thanks, guys. So there's a lot happening in the stablecoin space right now. It would be great to go down the line and talk about some of the trends that are happening in the space and how some of them specifically impact your work. I'll start with you, David.
Oh, okay. All right. There we go. Mic's not working. We'll switch around. I gotta be on the hot seat every time. First one, maybe reverse order us. Okay, let's mix it up. Great. So stablecoins. I mean, we're a trading firm, so we're interested in stablecoins that trade, right? Obviously, the two biggest ones that trade the most are USDT and USDC. And for us, whenever we look at emerging stablecoins, the question always is, what is the trading opportunity? We are seeing a lot of new stablecoins launched, issued, some that already have gained some traction, and we're in talks with a lot of these teams that the challenge is always, how do they bootstrap liquidity? And for us, the question always is, what sort of activity can we expect? So it is exciting to sort of see the growth of stablecoins. There's obviously a lot of challenges with the fragmentation, with stablecoins that don't have sufficient activity that makes sense for us to trade. But that's always the number one question: is there going to be volume and trading activity? And then if there is, then it's interesting for us to provide liquidity for that coin.
Trading is a super interesting use case. We care a lot about that in Mysten Labs and broader the SWI network. Me personally, I think one piece of recent news that I'm extremely excited about is, or rather it's not that new, but it's being talked more about, is the Stripe pay with crypto news. I think a lot of folks are keen on digging in deeper to better understand how this will drive broader adoption from not only institutions, but more retail users as well. If you think about stablecoins and the traditional growth trajectory that we've seen so far, majority of the circulating supply use cases is for trading on centralized exchanges and within DeFi. And payments currently only represent maybe 20% of that total activity. I would love to see that figure increase. And I think large players like the Stripes of the world, the Bridges of the world can really help propel that. And I think SWI is a great network for payments to happen on as well, specifically with stablecoins.
Awesome. I love it. Yeah, I'm excited about a bunch of these developments as well as some of the legislation we're starting to see come out of Washington. For us, the way that I think about the stablecoin market, and I'm open to feedback on this after, so please come and find me. But we've been spending a lot of time thinking about the stablecoin market in general. For me, what it boils down to is I think of it as the stablecoin stool. So one leg of the stool is the novel design mechanisms and issuers. So we're investors in protocols like Athena and Theo that are bringing kind of new structured financial products to the stablecoin ecosystem. And then you see on the issuance side, a handful of new issuers like Agora that have some edge on the distribution side, and there's strong value proposition there. So really excited about the novel design mechanisms and issuers. That's kind of leg one of the stool. The second leg is what I call the application layer, or the layer built on stablecoin rails. So we're increasingly seeing incredibly exciting companies, for example, like Felix Pago, that are using fully blockchain abstracted systems to transfer value across remittance corridors. So Felix Pago is WhatsApp-based remittances, fully blockchain abstracted, crypto mullet, stablecoins on the back, and just a really simple user interface on the front. So that's the second leg. And then the third leg is what I call kind of the infrastructure that powers both sides of those equations. And this is everything from the PSPs. Obviously, we've seen Bridge, BVNK, but a handful of new players there, like Ansible Labs, SpherePay, and another, I think that Paradigm just led a large round 4 called Mesh. And then within that kind of leg of the stool, we're also starting to see the emergence of a bunch of interesting kind of other infrastructure use cases, specifically around stablecoin clearing. So there are some great teams like Ubix and Atom out of Visa and other large organizations that are trying to build stablecoin clearing settlement networks, as well as things like decentralized FX order books to kind of power the settlement and the fiat off-ramps. So across that whole ecosystem, I think there's just a tremendous amount of innovation and exciting opportunities. And us, for one, we are actively deploying capital into that space.
I think the most exciting thing, happening now is I feel like crypto had a lot of stories in 2021 that got people excited. It got companies outside of the space to invest in crypto companies, to use crypto products. You had Nike doing NFT stuff. You had a lot of large banks looking at DeFi. And then for a few years, crypto didn't really have stories to tell people outside of the space about why they should be excited. And I think stablecoins now, you mentioned Stripe, and last week Ramp announced that they're exploring a stablecoin based product. It shows a reason for large institutions to care. And ultimately, I think we need that to kind of catalyze growth forward. So I think that's been really exciting to see.
Thank you all. So, Louisa, Regan both touched on some recent stablecoin developments, some major headlines in the space, whether it's Stripe, Ramp, Meta, which recently announced that they are re-entering the space years after Libra and Diem, and some other recent headlines from major TradFi and fintech players. So this is a question to any of the panelists that want to take it. I'm curious how you think about the end state in this space as TradFi and Web2 fintechs enter the space and crypto firms double down on the opportunity in the space. So where do you think that the two may collaborate? Where do you think that they will compete? And what will end up defining the winners or category leaders in the space?
I think given all of the software and liquidity and the underlying assets are open source, we tend to view distribution as a very important part of it. And I think you look at a lot of the infrastructure companies getting funded, maybe Bridge is like a good example. And like, their customers are fintechs, right? They make it very easy for fintechs to integrate stablecoins. And our view has generally been those products are more likely to win than a crypto native consumer product. Because ultimately, I don't think most people care about crypto. They want like money that works for them. And so when we, I think look at like where we think winners are going to be, even you look at a lot of the large providers today, and it's generally like some proprietary distribution that's like allowed them to win, right? Circle is like a very large deal with Coinbase. They pay them a lot of money. But as a result, if you mint a stable coin on Coinbase, like you use USDC. And so I think for us, we tend to view like fintech companies or companies that just have some large existing consumer audience, some large distribution as probably going to capture a lot of the value from this going forward.
Maybe chiming in here with some thoughts around just stablecoin issuers and the different types of stablecoin models we're seeing. Obviously, Circle and Tether have been around for a long time. You mentioned Agora, a project that I'm personally extremely excited about. They were one of the first pioneers of thinking about sharing the yield of the underlying reserves with the platforms that they partner with, which I think is extremely creative. And then, obviously, with Global Dollar, you're seeing a very similar model. I do think it will be a race to the bottom. We will see more stablecoin issuers come out with that model. But at the end of the day, the end game, in my opinion, is that you will see consolidation at some point. Now, what does that mean for the intersection of the stablecoin issuers with larger TradFi companies? I don't know. I think a lot of the banks and FIs have been on the sidelines monitoring how stablecoins activity has grown. And I think everyone is paying a lot of attention to this quite controversial stablecoin bill, especially given what happened last week. I do think that most of the FIs that I've spoken to, they will either start thinking about issuing their own stablecoin or perhaps come together in a consortium model, even though we all know that doesn't really end well. But I think we will start to see that again in our space, and I don't really know how all of that will pan out, but I'm excited for it.
Yeah, just to chime in here, I think it's impossible to talk about stablecoins right now without talking about the Genius and the Stable Acts. So it's a little bit unclear. I've heard varying and mixed opinions over the past couple of days. Will it be passed in this session? What happens with the midterms if it doesn't go through this Congress? Where does that leave us? But from my perspective, a lot of the financial institutions we have been talking to are essentially waiting for that piece of legislation and see that as a green light. So I think Bank of America has said that they plan to launch a stablecoin. Unclear whether they'll be tokenized deposits or actually like one-to-one backed stablecoins. But I would not be surprised if this kind of opened the floodgates for the more traditional financial services institutions. And within 2, 3, 5 years, we could see stablecoins from every major bank, at least in the U.S. And then I think, that kind of opens up the floodgates. What happens with some of the nation states? Are there CBDCs? How does that affect the kind of issuance landscape? So I think there's a lot of open questions around what the end state of this market looks like. But to Regan's point, I think no matter what, you're going to need some of these infrastructure providers.
Yeah, just not working. All right, there we go. Yeah. I guess it doesn't matter if it doesn't work. So yeah, I think just building on that, I 100% agree that the stablecoin legislation is key, and it's a downside surprise that we're even facing this friction. There was expectation that there'd be bipartisan support, and that would sort of be the easy piece of crypto legislation to get through this year. I still think it happens, but until it happens, there will be a lot of opportunities that just won't be unlocked. And then as the future looks beyond that, I think there'll be different stable coins for different purposes. There might be a leader for trading. There might be another leader for payments. And I think the yield-bearing aspect will be critical because if it just makes sense for users to get some share of that yield, and the stable coins that provide that will gain adoption, and that sort of growth will also impact the banking sector more generally, where I think banks will start to have to share more of the yield, even in checking accounts with users, in order to keep them. So that could be years away, but I think the stablecoin space, as that grows and that's adopted, and the stablecoins can be used for everyday, payment needs, that's actually going to affect the wider banking sector that's removed from the stablecoin industry.
Can you all hear me? Yeah. Okay. So a couple folks talked about the regulatory environment, especially in the US right now. I had an interesting conversation with some crypto policy folks yesterday at the conference who I asked about the stablecoin bill. And I hope they're right about this. They predict that the stablecoin bill will be passed in the Senate by June 1st. So in the next couple of weeks, which I think would be huge for the whole industry. So keeping my fingers crossed there. Shifting gears a little bit. So Micley and Regan, I'm curious, with large stablecoin issuers on the crypto native side, as well as large TradFi institutions really kind of taking full force in this space. What role do you see startups playing in the future in this space?
It's a good question. I mean, I think a lot of like venture capitalists, you look at a lot of like other categories in crypto and you can just like buy tokens and like hope they go up. And, you know, maybe that's a little bit easier than kind of looking at like a very competitive regulated landscape where you have like well-funded incumbents like Stripe entering the space. You know, I think like one of our view, like where startups can work is just like niche markets, small markets where like Stripe is not going to invest heavily in like on-ramps in Indonesia, just like as an example, right? It's like a large market. It's a large country. You could probably build like a big business doing that. Stripe is probably not going to focus on that in the near term. We've been excited about kind of vertically integrated companies going after markets where like there are very specific requirements for payment flows. So for example, we have a portfolio company called Koala Pay. They work with some of the largest nonprofits in the world to transfer money from, you have dollars in your bank account, you donate it to the Norwegian Refugee Council. How does that money make it to like a conflict zone in Somalia? There's a lot of transparency requirements, for example, like publishing the flow of funds, which is almost the opposite of what companies want, right? They want those to be private. But like, it's just like a very specific product. And like, again, like Stripe is not going to focus on like this market for the foreseeable future because there are other larger ones they can serve. So I think it's generally startups just like trying to solve a very specific pain point for like a very specific industry very well. And we're excited to back those companies.
Yeah, that's great. Totally agree with that. One other area we are very excited about is what I was alluding to earlier, which are the novel design mechanisms enabled via cryptographic rails. So I think two good examples of this are Athena, which we were early investors in, which for those of you that don't know, is basically just the delta neutral cash and carry trade, and then that yield packaged into a synthetic stable dollar called USDE. They've done extraordinarily well. I think they have about 3 billion in USDE circulation, third largest stablecoin issuer behind Circle and Tether. So just really excited about novel structured financial products like that. We actually just invested in another protocol called Theo.xyz. So it's a little bit similar. It's the delta neutral cash and carry trade, but fully based on the hyperliquid ecosystem. So fully on chain using the hyperliquid perp spreads to basically bootstrap TVL in a really capital efficient way, which they can then lend out against CeFi liquidity. Think about like the Coinbase CB wrapped BTC and being able to lend against that, building that sort of product for a lot of the APAC focused exchanges. So they just raised, I think, 20 million from Anthos, HackVC, and a number of others. So protocols and projects like that are leveraging cryptographic rails in unique ways to kind of build new synthetic stable dollars. That is an area we are very excited about as well, and think we will continue to see further innovation there.
So, David.
Oh, yeah, there you go. Yeah.
David, this question is for you. So with more stablecoins coming to market, I'm sure that liquidity fragmentation is becoming a growing challenge. How do you think about that at Wintermute? And are there ways to work around that or solve for that?
Yeah, it's a great question. So for us, there's stablecoins we're just going to trade because there's organic interest in us trading them, right? the trading pairs that are the most common are the ones that we're going to trade, the markets we want to be active in. But when we see a new stablecoin issuer come to us and want to grow their project, grow the liquidity, the cost for us is, the question for us is always the opportunity cost and the cost of capital, right? We are not interested in providing liquidity for something that doesn't trade. There's an actual cost. We have to put up capital, and that capital sitting there is basically dormant and could be used for something else. So it's sort of a chicken and egg situation where liquidity brings trading and volume, and trading volume brings liquidity, but you need something initial to get that started. And, there's all sorts of incentives that stablecoin issuers can think of to get users to adopt their stablecoin. Obviously, sharing the yield is one of them. Opportunity to do more things with it through payment solutions is another. And in terms of engaging liquidity providers, it's thinking about that cost of capital to us and how to address that, which there's a number of ways to think about. But that is always the question, the cost of capital and the opportunity cost for trading something that's not active relative to all the other trading opportunities that are out there.
So, Louisa, it would be great to hear your thoughts on SWI's overall stablecoin strategy and how that might differ from other chains in the space.
Not to be cheeky, we don't really think about other chain strategy. At Mysten Labs, we've typically always thought about products. Mysten Labs also build first-party products. And all of the co-founders are ex-Facebook, Meta, DM, Libra. So they've been building products with a user experience first and foremost in mind. So when I joined about 2 years ago, I was thinking about stablecoins firstly by how do we bring native dollar stablecoins to the broader SWI ecosystem so that DeFi can continue to grow. We've been fairly successful in bringing 4 to 5 native stablecoin issuers onto SWI with the likes of Circle, Agora, First Digital, Ondo USDY, etc. And I think it's a pretty good mix so far, and the ecosystem is growing. Our current DeFi TVL is about 1.8 billion. We're only 2 years old, and stablecoins represent about 800 million of that. I think for us, for Mysten, the next hurdle we would like to try to get across is figuring out non-dollar stablecoins adoption. We like the FX trading use case. Cross-border remittances is always very important. But I think in order to be successful in a non-dollar stablecoin strategy, you also need to activate the ramps, but also local use cases so that it's not isolated to just purely trading in FX.
Great. Thank you. So my last question for all of the panelists, and maybe we'll go in reverse order this time and start with Regan. I'd love to hear a hot take or contrarian opinion or prediction that you have about the space.
It's a good question. I think I'll go with this. I think a lot of venture capitalists are going to lose a lot of money investing in stablecoins, largely because I think like the problem set, the competitive nature of it looks much more like fintech than it does crypto. And like very few crypto venture capitalists came from a fintech background.
Maybe, I don't know how contrarian this is, but I'll see. Please come find me after and debate this one. I would say that within 3 years, the largest stablecoin issuer will not be Circle or Tether. It will be a U.S. regulated bank or a nation state.
I like that. I'm going to give 2. One is I think stablecoin trading activity in DeFi is going to surpass centralized exchanges. And I do think by the end of the year, we will see more non-dollar stablecoins growth in competing with the dollar stablecoins market.
First, just want to say thank you to Josh, Frank, and the Ty for hosting this event. Love Innovate. So thank you. A round of applause for the team there. Always a must-attend conference. Hot take. Building on what Mickey said, I think the largest stablecoin, let's say 5 years from now, doesn't yet exist, but my take will be a little different. I think it will be issued by Amazon because, as Regan said, they have the distribution. So Amazon coin, 5 years from now, biggest stable coin in the world. You heard it here.
Interesting. Thank you all so much. This was a great panel. I really appreciate you all taking the time. And thank you to the TIE for hosting us. Thanks, guys.
Let's hear it for Kayla, our great moderator.
Let's go.